Crowdsource funding, equity raising. Welcome to this special webinar for small proprietary companies to give you an overview of what's involved in this new legislation. Crowdsource funding is targeted at small proprietary companies and inventors. So let's have a look at how it can be utilised by people in business. There's two main phases. First of all, the legal tests, which obviously every company that aspires to raise capital as a crowdsource funding company has to comply with. The turnover has to be under $25 million for the previous 12 months on a group basis. And the group asset value for the group has to be under $25 million. If you don't meet those criteria, unfortunately, your company is not eligible to try to raise capital as a crowdsource funding company. And the company and no other associate of the company can be listed on a stock exchange anywhere in the world. And the company nor any associate can be listed on a financial market operated outside of Australia. So they're the legal tests. If your company is still alive, you're still in the process of potentially being eligible, let's move on. What we've called subjective comments. First of all, the company can be in any type of industry. It doesn't have to be a technology company. It could be a corner store. It could be an engineering consultancy practice. And there's no age specification. So the company could be 6 months old or it could be 80 years old. It doesn't matter. Now let's look at some of the examples that we have prepared for you. Your company might be interested because you're an early stage, high growth and disruptive company. Or you are keen to expand your business, or to acquire other businesses, or you have a vision for your business. Do you require funding to implement these visions? You might need a capital injection to facilitate the funding of a shareholder succession. You may have plowed all your profits over the years back into the business. You have treated it as your superannuation fund. But now when you're looking around to sell your business, you've noticed that in the marketplace, it's number one, there's a lot of businesses for sale. And number two, it's a bit difficult to sell businesses. And in the meanwhile, some of your family have come into work in the business and they're rather keen to take over the business, but you need capital to have a dignified retirement. Succession planning could be one of the very legitimate objectives of selling part of your company to a group of outside investors. Think about it if you're in that situation. Another area you may have some concern about is loans. You may have bank loans, and given the problems that banks currently have, dealing with banks is probably going to be fairly difficult for the next couple of years, and maybe forever. Or you may have loans that you secured from a family member, maybe your mother-in-law, and she now wishes to retire and needs the money back. Or you've borrowed money from a family friend. And one way of paying those loans back may be to sell part of your company to some external shareholders and use those funds to pay out those loans. You won't have to worry about paying interest anymore. All you'll have to do is pay dividends if the company has traded well, so you are able to declare a dividend. Hopefully you will, because that's what the whole idea is. So reorganizing your borrowings within your balance sheet could be a very sound way of utilizing crowdsource funding funds. You may have borrowed on credit cards, and one way of paying them out could be to refinance the business. So would the directors be interested in seriously looking at this type of proposal? Now, many of you have probably never thought about this type of reorganising your finances because, quite frankly, it has not been available for small, medium enterprises in Australia until now. We're playing catch-up in the introduction of crowdsourced funding because New Zealand, UK, most of Europe, and the USA and Canada have had this type of capital raising available for their small, medium enterprises for the last 6 to 7 years. I don't know why it's taken that long for our government to implement these strategies. Admittedly, everything to do with crowdsourced funding will require an allocation of shares being made, but this is part of wealth creation. Hopefully, your overall wealth will improve. The vast majority of investors that might be interested in investing in companies trying to raise capital as crowdsourced funding companies are not interested in taking over the company or being involved in day-to-day management. They are passive investors. Or another area might be that you're too old or too big for an early stage innovation company status. You may have developed a new product, process or service, but your company's aged over 3 years. Your expenditure's over $1 million in a 12-month period, and your income is over $200,000, which means that you are ineligible for early stage innovation company status. This is what crowdsourced funding was designed for companies like you, to help you with the commercialization process. Because you may have now discovered that it still costs a lot of money to move from the prototype stage to the actually being in business phase of a business. Another legitimate reason why you might be seeking to raise capital and allocating part of your company to your investors. The capital raising under crowdsourced funding, a crowdsourced funding company can raise up to $5 million every 12 months. And it can be raised as a combination of Section 708 of the Corporations Act and crowdsourced funding. Section 708 was the traditional way for the last 35 years anyhow, that small proprietary companies were able to raise capital in Australia. But it came with some restrictions. You can only have a maximum of 20 investors. And the maximum amount of money that can be raised is $2 million. And private companies need to be careful about the number of shareholders that they have, because the maximum for the private company status is 50. So Section 708 didn't quite work in with everyone. In the investment world, there is a classification referred to as a sophisticated investor. That is someone with a net worth of over $2.5 million, or who for the last 2 years has earned a gross income of over $250,000. There is no limit on the amount of money that a sophisticated investor can invest into a business. The limit for a retail investor is $10,000. So the structure we end up with in a proprietary company that is also a crowdsourced funding company is that we have ordinary shareholders, and the maximum we can have of those is 50. A small proprietary company can have employees, shareholders, and that's an unlimited number, obviously depending on the number of employees. And there's also then the potential to have crowdsourced funding shareholders, and there's no limit on the number you can have of those. So let's have a look at the crowdsourced funding legislation that applies. An offer must be made by the platform, and the platform is the intermediary's website. Intermediaries are people with Australian financial services licenses that have been appointed by the Australian Security Investment Commission, ASIC, and there are 7 of these companies in Australia who have got the administration of this legislation. They are the gatekeepers. So in order to make a crowdsourced funding offer, you must complete a crowdsourced funding offer document, which is basically a prospectus. So to do that, the company is going to require an overview of your market, a marketing plan, a business plan, budgets and cash flow forecasts, looking at the next 3 years, evaluation of the company, a calculation of what was a reasonable share price to offer investors to pay. And all that is then encompassed into a crowdsourced funding offer document. And that is what, when the intermediary is satisfied, is what the intermediary then places on their website. They will promote it through their affiliates, and you can promote it to your immediate contacts, your customers, your suppliers, your employees, your family, your friends, to see whether they are interested in going to that site to invest. And offers don't stay there forever. The maximum period is 3 months, but it can be closed earlier if the subscription amount's been received, or if you have set a period of only 1 month or 2 months. My recommendation, I'd always go for the 3 months. Give yourself the maximum opportunity of raising this capital. The main features of the crowdsourced funding amendments are that a retail investor may apply for a maximum of $10,000 investment per company in a 12-month period. And a retail investor will also have the benefit of a 5-day unconditional right to withdraw from this agreement. So they may have already signed on as a shareholder. They will have paid their money to the intermediary because that's what they've got to do. But if they change their mind within 5 business days, the intermediary has to refund their subscriptions to them and destroy the application for shares. Another part of the legislation is the company is not required to appoint an auditor until the company has raised more than $3 million from crowdsourced funding offers. I was just checking whether we had any questions. Got no questions yet. If you've got questions, please send them through to me. It's interesting to look at what this market might grow to. Whether you're going to be on your own, a bit like Robinson Crusoe, or whether you are going to be part of a movement around Australia that's trying to raise capital from the public. That's what's happened in UK, Europe, and USA. So let's have a look at what the company that claims to be the most experienced company in Australia at helping companies to raise capital who are not listed public companies, and that's Enable Funding, which has acquired the business that was known as ASOB, ASSOB, Australian Small Scale Offer Board. ASOB has been operating since 2007 and in that time has raised $148 million for 176 companies. So they've got a track record. And they have 30,330 exclusive members, according to their website. The exclusive members are potential investors. So let's look at their forecast. It's contained on their website. According to Enable Funding, in 2016, approximately $119 million was raised. This would have been from Section 708 capital raisings and the first part of early stage innovation company raisings. The expectation is that in 2018, $420 million would be raised. Now, these figures might be out by about 1 year because it's taken the government over a year to get the crowdsourced funding legislation to the stage it is today. So these figures might be out about 1 year. But Enable Funding forecasted in 2019, $688 million would be raised. By 2020, $1.023 billion, and in 2021, $1.52 billion. Even though those figures are out 1 year, it's still a very large market. Now, not every company is going to be raising $5 million, of course. If you work on an average capital raising of about $400,000, it's showing that this market, when it starts to mature, could be assisting 3,500 to 4,000 companies a year to raise capital in Australia. That's an extraordinary result. So don't go thinking you're going to be on your own and no one else is going to be doing this. It will become very popular for well-run, well-organised, small proprietary companies who have a story to tell, who have a desire to create a bigger and brighter business, and are quite happy to look at it as part of a wealth creation exercise. Because a bit like making a cake, they know that you need a whole range of ingredients to make a successful business. Flour, fruit, milk, all goes into making cakes, so I'm told. Same with a business. It needs an idea. It needs manpower. It needs capital, though, to be able to bring the business to fruition. So let's look at some of the packages that we have introduced on ESS Small Business targeted at small, medium enterprises. We've got some free material, which you can gain from our website. We also have an article, Understanding the Crowdsource Funding Offer Document Process. For an investment of $99, you can acquire that. We have another segment of material, Understanding the Crowdsource Funding Intermediaries Role, Responsibilities and Powers. This is very important for aspiring company directors. If you want to understand this, you should be reading up on what the requirements are, and we've made it easy for you, and your investment there is $99. And we have a further product, Investors Protection and Opportunities with Crowdsource Funding. This is summarising everything from the investor's point of view, primarily the retail investors, because it's the retail investors that are given protection, and company directors of companies who are trying to raise capital should have a clear understanding of what the government has said about protection for investors. And you can find out all about those packages by going to www.esssmallbusiness.com.au and then clicking on to crowdsourced funding. So if you've got any further questions or you need some other information, please contact me. There's my telephone numbers. Or send me an email, peter@essbiztools.com.au. And if you want to have a look at some of our other websites, we have ESS BizTools, which is primarily targeted at accountants and business advisors. ESS Small Business, which is the website that we have developed to communicate with people like you in the small, medium enterprise market. So thank you very much for your participation in this webinar or watching the recording of this webinar. Good luck with the expansion of your business. Have a great day. Goodbye.